Good morning. It's April the 13th, 2016. Time to kick off another trading day. The rally in the stock market yesterday that took the Dow up, I think, 165 points, continues overnight, fueled by China's export numbers being up 18.7%, reversing last month's dismal number. And their import numbers are still lower than they have been, but higher than forecast too. The yuan rallied. The Asian markets are up collectively 7.48. That rally spilled over into the UK and the EU, with their markets up 6.21 collectively. The news out of Europe showed the EU's industrial production lower than forecast, a negative number at -0.8. They were looking for -0.6. So the economy in Europe continues to soften. Why are the stock markets so high? Well, there's a structure issue. As long as we stay above 2030 on the E-mini, we can get 2096. Don't know what type of news, don't know how long it'll take, but the structure is still pointed higher. We had last week's Fed comments by Dudley. We had a special meeting on Monday. We had a special meeting between Yellen and Obama, and most of the commentary about that is that Janet Yellen got her marching orders that the stock market will rally through the presidential election. And we'll see if that happens. And all federal bureaucracies and agencies are influenced by the demands of the current administration, whatever that may be. And they don't ignore, you can't ignore a president calling a special meeting with you and telling you that he would like such and such to happen. And we see it happen all the time. So the one bright spot that the world central bankers can all point to is that the stock markets are sideways to higher. And I expect that to continue. So where does that bring us today with the 30-year and the 10-year? Well, we have a 10-year auction. And while the markets are pointed lower, and I expect them to be a little bit lower, I don't expect them to break, because you can't move this paper in a market that's straight down. And so at some point I think we'll have some buying. There's reasonable support at 8 to 12, and there's resistance at 16 to 20. And it's a pretty tight market, as you can see. And given the rally that we had in the overnight equity markets, you'd expect treasuries to be much lower, and they're not because of the 10-year auction. Retail sales up 1/10. Ex-autos up 0.4. PPI up 0.3. Probably the cost of oil was the biggest factor. Core, which would lag, up 0.1. Business inventories -0.1. Crude inventories, they called up 900,000 barrels. The APIs last night built, I think, 6 million barrels plus. Ten-year auction, and then the beige book. And the beige book is likely to show economic slowing. There probably won't be too many bright spots in that. So the news focus will be retail sales, ex-autos, and PPI. And they both come at the same time, so the major news focus will be the retail sales, ex-autos. For crude oil, inventory day, that'll be their focus, and then it'll move to the beige book. So right now our first sell is 16 to 20. Sell 1, 23.27, sell 2. On the buy side, we're going to try to 5 for 9s. May take a 13 to get in. I don't know. Just a lot of it just depends on where the retail sales number. The retail sales number, if as forecast, is supportive for treasuries. And then 29's to 01. So we'll put a question mark here at 13. We do have retail sales. It helps the dealers, primary dealers, move paper if interest rates are a little higher. So everything is pointed towards lower prices this morning. And we'll play for that, and we'll adjust after the retail sales news. Okay, looking at the 30-year, this high volume number down here at 16 to 18. Got a little dent at 23. So 16 to 20 could be pretty good support. And again, you'd expect treasuries to be lower given what went on in stocks yesterday. They're not. And that's because of the 10-year auction, in my opinion. So we're going to circle, and it may take a 3 to get off a short, but we're going to make 4 to 8, put a question mark there. And 11 to 15 is going to be sell 1. Leaning against the Globex high. 19 to 23 will be sell 2. On the buy side, 20 to 24 will be our number 1 level. So 17 to 13, buy 1. And then I'm gonna pull that in a little closer because of the 10-year auction today. Buy 2, 5 to 9. Like to get it done at 5 or better, but that's the way we'll call it. And we do have news that can definitely impact things. Okay, gold is off overnight. Risk-on investments are popular. Buy stocks, sell gold. That happens. And we can't forget that inverse relationship. And the selling started at Globex. Yeah, we had a B pattern coming out of yesterday. We thought 1250 was probably pretty good support. Blew right through that. So the next area of support is going to be this 35, 37 area. So we've got 40, 42. And a little bit lower, 39, 41, buy 1. And 36, 34, buy 2. And this is the attractor. This is the high volume number. So a limit buy at 1235, leaning against this high volume number, would work. We're at 43. So 45, 47, sell 1. 49, 51, sell 2. I do believe that people will view this as a buying opportunity. I'm not saying it can't trade lower. Right now it is pointed lower. 35, 37 area offers us an advantage. But gold does sell for a day or two from time to time. Okay, the euro got smashed overnight, and it was pointed lower. Draghi's off the hook a little bit because of this. Didn't see any specific news as to directly tied to the euro, but we like the short side of the market, as you well know. So we got a low volume number here. at basically 13.10. So buying against 13 even, 13.10, buy one. The MIPS market could find support this morning because of the retail sales numbers. They're in lower than forecast. It would show on a relative basis that Europe's economy was a little better than the US's. So we do have news to get through. Last rotate up stopped at 33 to 43, so 30 to 40, sell one. And then 60 to 70, sell two. And like the short side, as I usually do, better than the long side. And that hadn't stopped it from rallying. But we can be more aggressive when the market does move lower. Okay, crude oil. APIs built 6 million barrels, calling for a build of 900,000 barrels in the United States. Official government inventory report from the Energy Department. This market right here, this 42, say 50, is probably best resistance. Pretty easy to get back to 41.50, this high volume number. The breakout yesterday came from 41. So 41, 41 and a quarter. Buy one. You'd expect a little long liquidation because of the rally that we've had into today's number, but you know, the worse the number is, the more likely the market is to rally. It rallies and breaks in the crude market don't have a hell of a lot to do with inventory reports. Usually they're pretty much tied to where is OPEC taking the market, and OPEC saying that we can get a deal this weekend. So 41.75, 42, sell one, 42 and a quarter, 42.50, sell two. Okay, to the ES. Yellen's meeting with Obama was taken as supportive for the stock market. Bullard, the head of the New York Fed, comments last week were dovish, supportive for the market. The market has rallied. We've broken out of the trading range, which was capped at 60. So we should have pretty good support, 55 to 60, and really the on a 180-day on an annual basis, the high volume number on the F1 screens up here at 95, 96. On 180 days, the draw is 85, 87. So that is within reach today if we rally at 20 points. So we've got a lot of news, and it will impact the trading. Retail sales plus 1/10. Ex-autos plus 4/10. PPI plus 3/10. Core plus 1/10. Core lags the raw number of PPI. Business inventories minus 1/10. Crude oil plus 0.9 million barrels. Beige book. So retail sales ex autos 1, number 2 PPI. number 3 beige book. And that's where the market is. So they've got plus 0.4 for retail sales is a pretty bullish expectation. There's room for disappointment there. And we'll see if that actually happens. So the easiest trade to see is going to be a little bit higher than the overnight session, but failure to take out and hold 70. So 69.74, sell 1. We'll adjust it after the news. 79.84, sell 2. On the buy side, 56 to 61, buy 1. And 46.51, buy 2. It's hard to believe when you first get into the profile that structure can dictate or rule. And you know, we sometimes lovingly call it magic, but when you take out low volume numbers, it's the next stop without a big change in news or sentiment is going to be the high volume number. So on a 1 year basis, that low volume number at 2030 has held, and we've said, you know, since we've been above 2030, as long as that number holds, based on the F1 screens, 2096 is the trading target. On the 180-day information, 85.87 is the trading target. So we're moving up. So got to get through 70 and hold 70 for that to happen. We do have some news this morning that will influence the trading. And there's room for disappointment. It can come in lower than forecast. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will see you as soon as possible.